What's up, guys? It is Monday, January 30th, 2:40 p.m. and this is the crypto newsletter. Quick little update on the market from the video that we released earlier this morning, the market update. If you're in the Discord, you can see it right up here. Released it this morning, 11 a.m. And yeah, what's happening right now in the charts? We outlined the scenario in this video. I had followed up pertaining to the market update right there. And then I said DXY is breaking up still, could be in for another sell-off. That was at 2:09 p.m. Keep your eyes at those levels for the market update. And literally 1 minute later, everything broke down sharply. But I laid out the scenarios now going forward. So if you're already in the Discord, you've seen those. If you're not already in the Discord, I'll put the link in the bio. Come join it. All right, let's start off with the news. So we got, well, this is self-custody 101, hot wallets versus cold wallets. What I'm going to do is send that into the Discord here for security tips, so you guys have it. Let me now dive into the first bit of news, which is huge. Amazon's Web3 foray will be a compliance nightmare. Bitcoin tops 23.9K, but this is what we've been covering, is that the retail giants initiative, especially in NFTs, may force some regulatory clarity for digital assets. Oh my God, man. We had said, hey, they're rumored to be, based on some insider sources, to be dropping or making their a public announcement in April about really entering into the Web3 space head on. We had speculated around March to April, there's going to be some regulatory event that's going to allow them to make that big announcement of going full-fledged. That will lead to a catalyst for the crypto market to pop up, because you got regulatory clarity, the seal of the deal for the crypto market, and being it a part of the traditional financial system and a new asset class. And then you have the biggest powerhouse in the world right now, Amazon, stepping into it head on. And you're going to see a whole lot of companies, brands, people just following suit. So that's going to all unveil in the next, well, it's about to be February, in the next couple months here. So, and now we have this article kind of detailing that they're speculating on that too. And it just makes sense. So Insights, Amazon is rumored to be unveiling an NFT initiative, part of the retail giant's larger push into Web3. The project could raise significant regulatory issues, and it may force some sort of regulatory clarity for digital assets. Love it. Love to see it. So that's basically the nuts and bolts of it. If we go down here, flying blind, generally speaking, major blue chip corporations have avoided Web3 because of legal uncertainties. Sure, there have been efforts by payment companies like Visa and MasterCard to integrate stablecoins into their networks. Many crypto nodes are hosted on Amazon Cloud Service, and big tech and traditional finance firms are regular investors in the crypto economy. But this doesn't mean they are stakeholders in the Web3 economy. Embracing the ethos of decentralized ownership, regulatory uncertainty and lack of clarity interferes. Amazon's efforts are potentially transformational if it can succeed, which will mean addressing the regulatory issues. Boom, right there. Then it talks about our NFT securities. I guess there's a case against Dapper Labs right now, which their coin is Flow. Argues that Dapper Labs, NBA, Top Shot are securities because their value increased in the success of the project. We're not going to dive into that, but basically, as you can see, based off of all this unfolding and a potential announcement coming from Amazon, there's likely to be some regulatory clarity around March, April. Now let's go into this. Enterprise applications of crypto liquidity. I think we covered this back. I mean, we've been on it, so we probably covered that in October. I'm going to skip that. Chalk and cheese when crypto assets meet the security laws. Crypto assets cannot function as they're designed to while being securities. Lewis Cohen, co-founder of DLX Law, writes. So we frequently hear from regulators that they view most crypto assets as securities, and as such, those crypto assets need to be registered with the SEC if they are to be offered to the general public or held by more than 500 retail investors. This latter test in particular would likely ensnare most large cap crypto assets available today on Coinbase and other leading marketplaces, even if the assets were not originally offered to the public. So when are crypto assets securities? So we recently wrote a lengthy paper on this topic entitled The Ineluctable Modality of Securities Law, Why Fungible Crypto Assets Are Not Securities. I'll pull that up for another video. We go down here, compliance conundrum, who's responsible. Yeah, very in-depth. We're not going to cover that. We're going to keep this high level. But as you can see, the question of when is a crypto asset actually a security? It's not a matter of all of them are securities, but when is it really actually a security? Because not all of them are. And we're going to probably be seeing that question be answered here at the end of the first quarter or in the second quarter. Now that was that article. Now let's keep going. So growth of Tether supply, positive indicator for further crypto gains. Analysts say that USDT growth resembles similar periods in 2019 and 2020, which coincided with Bitcoin bull markets. The supply of leading stablecoin Tether has clawed back recent losses to reach 2-month highs as speculation of this year's market rally continues to drive digital assets further. We have definitely seen an elevated interest in digital asset accumulation as well as transaction flows in stablecoins recently. The Treasurer Australian trading firm ZeroCap told Blockworks, however, we can't be sure it's directly related to USDT supply movement or it's really simply a risk adjustment on macroeconomic events. And yeah, there we go. Tether is definitely in the cards of sketchy stuff, that's for sure. Bitcoin price boosts miners as hash rate climbs. Share prices of US traded crypto mining firms finished this week higher on Friday, bolstered by short-term risk on trader sentiment for digital assets. Majority of crypto-related equities finished up in positive territory last week, with US traded mining firms gaining distance from historical lows set at the end of last year. So you have Bit mining, you have Chinese miner, they're all going up because the hash rate's going up. And then Coin also went up, which is Coinbase and Robinhood stock have gone up. So we were seeing all markets or asset classes like crypto stocks go up. And if cryptos are going up, then like crypto kind of companies on the stock exchange like Coinbase are likely going up as well too. So there we go. First mover America's Bitcoin was weekend warrior. The latest price movements in crypto markets in context for January 30th, 2023. We're on top of this. I mean, we know we got that covered. Crypto India looks for relief but holds out little hope in budget speech. India is unlikely to make any crypto-related tax cuts, multiple sources say. We've been tracking that India is the head of the G20 this year. They're likely going to all eyes on them as far as international global regulations and a framework of clarity on digital assets. So this Wednesday, I guess they have a budget proposal. Yeah, a new budget. And we're going to have to keep our eyes peeled to that because whatever they're trying to do, they're likely going to try to frame the conversation for the whole world at the G20. Tax cut unlikely. Digital rupee. It's unclear whether India will mention its ongoing work around CBDC, the retail version of it, which is expected to roll out fully by December. There we go. Coinbase exec says institutional investors still into crypto post FTX. Why would they leave? They know that this asset class is here to stay. It's a matter of which ones of the asset class are here to stay. And I'm sure all of us here are watching this right now, you already know which ones those are. So David Duong, head of institutional research at the exchange, says the collapse of Sam Bankman-Fried's platform didn't lead to a pullback. No, it didn't. We still have institutional investors deep into it or waiting to get deep into it, and big companies, blue chip companies like Amazon. Web3 security firm Hypernative secures $9 million in seed funding. So I think a couple, like segments of the crypto market that may have their time to shine as far as those specific, back in the bull run of 2021, you had like the NFTs go off for a bit, and then you had the meme coins go off for a bit, and then so I believe that we're going to have multiple kind of sectors or segments of the crypto space go on their runs that kind of outperform the whole entire market. I believe one of those segments will be the security side of Web3 coins, and then one of them will be AI as well too. So the company also made public its first product, Precog, a platform aiming to uncover cyber, economic, governance, and community threats before they can have an impact. So we're gonna have to keep our eyes and tracking this, see if they launch a coin or whatever like that. So that's that. Fed watch, Bitcoin gives up weekend gains. Analysts say not to worry. Bitcoin and Ether lost close to 3 to 4% respectively ahead of the Fed's rate decision. So major crypto tokens retreated Monday and erased their weekend's gains as traders gear up for a potentially volatile week ahead of the Federal Reserve's interest rate decision. That's why I'm always wary about weekend gains, because you can't see how the dollar is trading. When we open back up on Monday, usually there's a gap because of the Bitcoin future chart. I'll pull that up real quick for people that don't know. And we likely probably filled that gap now that I'm thinking about it. But there's some more gaps that we set from back, because a lot of the pumps that we've been having were on the weekend. Like we have a gap here around, let me go to the daily chart so you can see it better. And I'll hide these indicators. So we have a gap sitting here at like 20,000. So, and I'll even go to a 4 hour, you can see it better. Yeah, see that gap right there? We had a gap. If I go down to an hour now, because of the weekend, right? So we popped up on the weekend. That was the gap right there. We filled it. So now we filled it. We had a gap here. We filled it. We had a gap there. We filled it. Usually we fill these gaps. If I'm looking and there's any gaps that we haven't filled, it's back down here at 20,000 flat. So definitely in the cards to get filled eventually here soon. If anything, I'd like to actually see it sooner than later. I like to see this pull down, maybe go sideways, then go back up like that. And to be honest, that's probably the most likely scenario. I wouldn't like to see us actually like hold here and keep going, because that will always be on my mind for sure. I would rather just see us tank now, get it over with. Now let's really start to kick up the run. Now let's go into the next article. We got actually, to keep going on that topic, we had this here. Oh, here it is. Okay. There could be an upcoming sharp pivot from the U.S. Federal Reserve, John Hopkins professor Steve Hanks says. The leading indicator will be the markets going into some kind of liquidity crunch. So we've been saying, I mean, there could be a sharp pivot coming out of the Fed. Will there be an event before that happens? Maybe, but it would have to happen in the next couple of days here. But yeah, so he's saying there could be a sharp pivot. Let's watch this video.
That question, look at the Chicago Mercantile Exchange and the probabilities for the next meeting. Let's worry about Wednesday. Wednesday, it looks like there's virtually, 98.4% probability priced into the market of a 25% basis point. So that's I think what's going to happen Wednesday, and they'll continue on this track. But to answer your question, there could be a sharp pivot, and the sharp pivot could come from a liquidity crunch. If we have a liquidity crunch, which we've had before, by the way, when the markets really bound up. Remember the famous repo fiasco we had a few years back? The Fed pivoted almost within 24 hours. So if you want to look for a fast pivot, the leading indicator will be the markets going into some kind of liquidity crunch. That question.
So that could potentially lead to the scenario we've been tracking, was the 2015 bear market. At the end, when we broke out of the bear market long-term trend line, if I pull it up here. Oh, let me go to the actual Bitcoin chart. Yeah, that could lead to this scenario. And let me go to the more history here. Yeah, 2015, we broke out of the long-term trend line down here, right? So we could be in something like this right now. We have a liquidity crunch across all markets, dollars ripping up, and then we see the Fed pivot as we get to these lows here, retest of the lows, and then we go into our bull market. All right, now we got our eyes on it. Now we know what to look for, but now we know what to expect if that scenario were to play out. And we wouldn't be panicking. You'd see a lot of people at that time being like, I told you the bear market's still on, and we'll already know kind of the game plan at that point. And that would make sense, too, because that would fill our 20K gap. So our 20K gap is right here. Maybe we overshoot. So all of a sudden we overshoot, we fill that gap, we come down, Fed pivot, boom, right back up, and then we go. That would be beautiful to play out. Honestly, yeah, I'm seeing that be the case. I'm seeing that. We're gonna have our eyes on that. Elon Musk wants Twitter payment system to accommodate crypto. Doge spiked on the news. I don't know why Doge would be spiking on the news. Everybody wraps Doge with Elon and Twitter. I think it would be built with something Interledger from Ripple or Interstellar from Stellar. That is definitely a scenario where they can accept fiat in multiple different currencies. So cryptos. Twitter is designing a system to permit payments through the social media platform. And although billionaire owner Elon Musk wants it first and foremost to be for fiat currencies, he wants the ability to add cryptos later. There we go. Then we got blockchain scaling project Sovereign Labs raises 7.4 in seed funding. I do not know why I pulled this up. Oh, because ZK rollup, zero knowledge rollups, because privacy is going to be maybe another segment or sector that takes off for a bit. Because, oh, like this, from our perspective, the other systems like subnets or bridges all lose the core trait of blockchains, which is end-to-end user verification. If we lose that, we might as well have built the system on Amazon Web Services. Think about the healthcare industry. If you were to share kind of medical info on a blockchain contract that could, you know, somebody could pry into it, a hacker see it, you need that privacy aspect to sit, that layer, that privacy layer to sit on top of maybe like an Ethereum or an Avalanche or something like that. So privacy layers or cryptos that are working on that problem are going to be big, and we're going to have to keep an eye to see what coins or projects are focused on that, because there are specific use cases for that. I'm not saying like Monero or Zcash acting as like a private anonymous currency, but more of what's a privacy layer to put on a current layer 1 smart contract that can, you know, handle like health, like the transferring of health client documents like that, because of HIPAA laws. You're going to need that. The use case is there. This is on my radar for a big short. Sandbox Sand surges 90% since start a year ahead of token unlock. So mid-February, there's going to be unlock of 12% of the token supply. We may have a lead up into that event, kind of have people chasing it, and then boom, the unlock happens. We sell off. The short is gearing up for that. I'm going to keep my eyes on it. Then we have CZ. 20 years ago, if I told you there is a new way to send information across the globe at faster speed with lower cost, would you use it? The majority of people would be like, you're crazy. Why would we need that? And then now 20 years later, it's like, well, we do need that. I mean, it's kind of obvious. Now today, I'm telling you, there's a new way to send value across the globe at faster speed with lower fees. People don't think there's a use case for that. It's the same story, but in 10 years, but I think even shorter, five years, everybody's going to be like, well, why wasn't this like that at the beginning? And that by that time, if you're investing, then it's too late. That's why we're investing now when it's under the radar. History doesn't predict the future, but this is the history, 4 years cycle so far for Bitcoin. And that's what we kind of tracked. And maybe our market update from like a week ago, we said, hey, every time we flash a 10-day buy now, for some weird reason, it matches to be on every 4 years, we see the bottom. So if I go from here to here, it's 4 years. If I go from here to here, it's 4 years. If I go from here to here, it's been 4 years. So like it matches up. Now let's go to this big week ahead, just like the Federal Reserve meeting, FOMC, I think on Wednesday, Meta earnings, Apple earnings, FOMC, Amazon, non-farm payrolls, Bank of England rate decision, EBC rate decision. Maybe they were meaning to say ECB. Alphabet earnings, Microsoft earnings, unemployment rate. It is a big week. It's going to be volatile for sure. Elon Musk, Twitter payments be fiat first, but built so that crypto could potentially be added. Then shout out to my dude here saying, since you were very good, I'll give you a gift. The only analysis on the right charts are done by you on Twitter and YouTube. Finally, a young boy who amazes me. Good luck, future multimillionaire, XLM 2017. And then shout out to you, bro. Come join the Discord, say what up. But he laid out this chart and kind of the fractal analysis, repetitive pattern, 2017, XLM right there. And then you have what's playing out now. And we're close to the shoot. That's for sure, my man. Appreciate you. Now we got this. CZ, more trips, more adoption. He was in Brazil. Shout out Brazil. Binance is launching a prepaid crypto card in Brazil in partnership with MasterCard. So we're seeing that. And then we got Chain. So Phoenix had said something in the Discord saying that Chain was rebranded to Onyx. And then when I was looking on a website, I did see it on one, but I didn't see it on another. I checked out their profile. I don't see any mention of it here, but I did see this Miami Heat. They got the Chain logo there. So that's dope. But yeah, I'm going to look into more of that Onyx because JP Morgan's blockchain is called Onyx. Maybe there's a relationship there, or maybe it's just some FUD or some. We got to take a look at that. So I'm going to look at that. And then lastly, we got the SEC Philippines is consulting the public on draft rules targeting crypto under Broad Consumer Protections Act. We're seeing the rest of the world get their ish together. The US now has to step up. So that's it for this newsletter. I'll see you guys in the next video.